Welcome back to the deep dive. Today, we're exploring AIFEX, a really interesting project sitting in the crossroads of AI and DeFi. And, well, it's doing things a bit differently. Yeah, if you've been keeping an eye on the crypto space, you might have noticed AIFEX. Its price, remarkably steady, sitting around, $6.48. But here's the puzzle. That stability holds, even when, looking at the last 24 hours, there's actually been more selling volume than buying. Significantly more, in fact. It's kind of odd, right? Like a ship holding steady in rough seas. So the big question everyone's asking is, why isn't it tanking? What's keeping it afloat? So our mission today, to really unpack the strategy behind AIFEX. We're not just surface level here. We want to dissect the financial engineering, you could say. We'll look at why it behaves so differently from your average speculative coin and explore the vision driving its potential. Think of it as looking through the eyes of a sharp crypto strategist.
Exactly. And this isn't about quick flips or day trading signals. We're trying to understand the deep structure, the actual design of AIFEX. How do all these pieces fit together to build something resilient, something meant for, sustained growth? It's about seeing the bigger picture, the long game, not just the daily noise.
Okay, let's crack this open then. Usually, heavy selling means a price dive. We all know that. But AIFEX seems to play by different rules. What's the core reason? What's fundamentally different in its DNA?
Well, it comes down to deliberate design. It's baked right into the AIFEX DeFi system from the start. Unlike a lot of projects that just react to whatever the market throws at them, AIFEX has proactive mechanisms built in. It uses this powerful duo, an active market maker, working hand in hand with a buyback and burn system. And these aren't just fancy terms. They fundamentally change the token's economics.
Okay, market maker plus buyback and burn. How does that actually play out? What does it look like in action?
Right. So first, the market maker isn't just passive. It's actively involved, ready to buy or sell AFX to provide liquidity and, crucially, smooth out those wild price swings. It's like a shock absorber. But then here's the really clever part. When someone sells AFX, the system doesn't just let the price drop. The project itself steps in and buys back a portion of those sold tokens. And the absolutely critical step, what happens next, those bought back tokens are burned.
Burned, meaning destroyed.
Exactly. Permanently removed from circulation, gone forever. So the total supply actually shrinks. What's fascinating here is this mechanism kicks in precisely when they're selling pressure, so it directly fights against sharp price drops by reducing supply. It builds in a kind of structural floor.
That is smart. Almost like an automated defense system against sell-offs. But playing devil's advocate here, doesn't having the project actively buy back tokens using market maker, doesn't that introduce a degree of centralization, or at least project influence? How does that square with the decentralized part of DeFi?
That's a really important point and a fair question. The key is transparency and automation. These actions, the market making, the buybacks, the burns, they're governed by smart contracts, running on predefined rules visible to everyone. It's designed for structural support, not for, day-to-day manipulation by a central team. AIFEEX seems to have made a strategic choice. Prioritize stability and long-term value for its users, maybe slightly over absolute, uncontrolled decentralization. The goal is utility and minimizing that crazy speculative volatility.
Okay, that makes sense. A strategic trade-off. Now let's talk about that sell volume. We've seen the data. It looks high, right? And usually that's a red flag. But is that number telling us everything? What might we be missing when we just look at the raw sell volume for AIFEEX?
Absolutely. That raw number can definitely be misleading if you take it in isolation. Yes, some of that volume is short-term traders taking profits. That happens everywhere. But there's another huge factor, often overlooked, the long-term holders, the stakers. See, a very significant chunk of AFX tokens aren't just sitting in wallets, they're actively staked within the AIFEX app.
Staked meaning locked up, right?
Exactly. Locked up, committed to the platform, often for set periods. They're simply not on the open market, available to be sold day to day. So if you connect the dots, this staking massively reduces the actual circulating supply that can be traded freely. It means the real selling pressure hitting the open market is way lighter than that raw sell volume number suggests. A big slice of the supply is just off the table, working for the platform instead.
Okay, so it's not just what's trading, but crucially what isn't trading because it's locked away long term.
Yeah.
That definitely reframes how you look at supply and demand here. So stability mechanisms, committed holders, but how does AIEX actually plan to grow long term? How does it build value beyond just defending its price? You mentioned the ecosystem.
Right, and this is where the vision really shines, I think. The whole AIFEX ecosystem is engineered to feed value back into the AFX token itself. It's designed as a self-reinforcing loop. And let's clarify the AI part quickly. The AI DeFi platform uses proprietary artificial intelligence. Think algorithms optimizing yield farming, managing liquidity across different pools super efficiently, automating complex DeFi tasks.
Okay, so the AI makes the platform services better, more efficient, maybe higher yielding for users.
Precisely. Better services attract more users and generate more revenue for the platform. And here's the kicker. A massive 70% of all the revenue generated by these AI-powered DeFi services gets used to buy back AFX tokens from the open market.
70%. Wow, that's a huge chunk.
It's a huge commitment. Think about what that means. More users, more platform activity equals more revenue. More revenue equals more automatic buying of AFX. So this creates constant organic buy pressure driven by the platform's actual success and utility, not just speculation. And this raises an important question. If supply is going down because of the burning and demand is constantly being propped up by these revenue-fueled buybacks, well, structurally, that puts strong upward pressure on the price over the medium to long term, doesn't it? Independent of market hype.
That's a powerful engine driving value from within the system itself, almost creating its own internal demand.
Quick question on that 70%. If so much revenue goes to buybacks, does that leave enough for the project to, keep innovating, fund new developments, pay the team? Isn't there a risk of starving future growth? That's a standard concern, but it seems well managed here. The remaining 30% of revenue, plus what's likely a separate treasury allocation, is specifically earmarked for development, operations, R&D. The strategic insight, I think, is that a stable, appreciating token supported by a successful ecosystem is the best funding mechanism long-term. A higher token value actually attracts more resources and partnerships down the line. It's about building a sustainable foundation, not just short-term spending.
Okay, understood. Strategic reinvestment. So, let's bring it back to the present. What do the current market numbers tell us right now about AIFEEX's health and position?
Yeah, looking at the snapshot, it's quite revealing for a strategist. That price, holding firm around $6.48, especially after weathering previous market dips and defending that $6 level, that's significant. It shows resilience. It suggests those underlying mechanisms we talked about are actually working as intended. It's not just passive support. It looks like active defense.
And the other metrics? Volume, liquidity.
Well, the 24-hour volume is around $1.9 million. That's pretty active. Shows people are using it, engaging with it. Liquidity is sitting at about $8.3 million. That's a healthy pool, meaning people can trade reasonably sized amounts without causing massive price swings. Helps with stability. And transactions are around 700-800 or so. Again, shows consistent activity. Now, even looking at that buy versus sell volume, again, sells slightly higher. 970K versus 971K buys the price still held. The fact it didn't budge much despite that slight negative flow, that's a strong signal. It tells you the structural support is robust. Even if some smaller players might be getting nervous, the foundation seems solid.
That stability, even under slight pressure, definitely speaks volumes. Okay, shifting gears. Let's look ahead. What's on the horizon? Are there any potential catalysts that could really change the game for AIFEX?
This is where it gets really interesting, especially from a strategic viewpoint. There's strong insider talk, more than just whispers, that AIFEX is gearing up for a major CEX listing, a centralized exchange listing in Hong Kong, potentially this September.
Hong Kong, that's a major financial center.
Yeah, exactly. This wouldn't just be any CEX listing. A listing in Hong Kong opens the door to significant new liquidity. And crucially, it attracts a different class of investor. Larger institutions, serious capital, the kind of players who do deep due diligence and appreciate the stability AIFEX is building. So think about it. You potentially have this wave of new, substantial demand coming in.
Hitting a system where the supply is actively being reduced through burning.
Precisely. Increased demand meets shrinking available supply. The potential for a significant upward price movement becomes, well, very high indeed. It's about tapping into a much larger, more sophisticated pool of capital that values what AIFEX offers structurally.
That sounds like a very deliberate strategic move to level up their investor base. But you know how it goes sometimes. Big listing happens, then sell the news, right? People cash out on the hype. How might AIFEX's structure handle that potential initial sell-off post-listing?
And that's where the design comes back into play. While, yeah, some sell the news is always possible, AIFEX is arguably much better equipped to handle it than most. You've got the market maker ready to absorb shocks, the ongoing buybacks providing constant underlying demand, and the already reduced circulating supply thanks to staking and burning. These aren't just features, they're like built-in shock absorbers. They should significantly dampen that kind of volatility and help the price find its footing much faster than a purely speculative token might. It's designed to weather those impacts.
Okay, so the structure itself provides a buffer against typical post-listing dumps. Makes sense. All right, let's tie this all together. If someone's watching AIFEEX, maybe comparing it to other projects, what's the core strategic takeaway? Why does it stand out?
From that strategic lens, AIEX really carves out its own niche. The key advantages stack up. First, you have that genuinely robust price support. It's not theoretical. We're seeing it work, driven by the market maker, the buybacks and the burns. Second, there's reduced real market pressure because so many tokens are locked away in staking, limiting what's actually available to sell day to day.
Right, the circulating supply point.
Exactly. Third, there's that engine of self-sustaining growth, with 70% of the platform's own revenue flowing back to buy and support the token. That's intrinsic demand. And finally, its strategic positioning right now seems quite sound. You look at the market cap, around $1.07 billion, compared to the liquidity of $8.3 million. The valuation doesn't seem wildly inflated. It feels balanced. So even when sell volume ticks up slightly, the fact the price holds and the structure remains intact suggests, well, for a savvy investor, it's still a very interesting project. Maybe even, an opportunity to dollar cost average during dips, especially with something like that Hong Kong CEX listing potentially around the corner. It feels like a project playing chess, not checkers.
It really highlights the difference between just reacting to market sentiment and having deliberate built-in financial engineering. It's about the design, not just the hype. So as we wrap this up, the core idea we really want you to walk away with is this. AIFEX isn't just another name in the crypto list. It appears to be a carefully constructed financial ecosystem, leveraging AI within DeFi, built quite intentionally for resilience, stability, and potentially long-term value.
Absolutely. And this raises an important question for anyone serious about this space. It really pays to look beyond just the daily price chart wiggles. You need to consider the whole system, the architecture, the strategic vision behind it all. Understanding why it behaves the way it does is key to seeing its real potential, separating it from purely speculative plays.
Well said. And that leaves us with a final thought for you, our listener, to chew on. Imagine if more projects in DeFi started adopting this kind of intelligent blend: strategic market making, real community commitment via things like staking, and growth fueled by actual ecosystem revenue. What could it mean for the future of DeFi overall? Could we see a shift towards more projects built for sustainable long-term value rather than just chasing the next short-term pump? Something to think about. Thank you for tuning in to this deep dive on AIFEEX. We hope this gives you a much clearer, more strategic perspective on what makes this project tick.